Let's get one thing straight. Wealth that lasts isn't built on quick wins or hot tips. It's built on a solid, sustainable investment strategy. If you're chasing the latest stock craze or jumping in and out of the market based on what some talking head on TV says, you're setting yourself up for a wild ride, and not the good kind. Sustainable investing is about creating a strategy that works for the long haul, one that weathers the storms and keeps you moving steadily towards your financial goals. It's not flashy, and it's not going to make you a millionaire overnight, but here's the truth. The wealth that comes quickly often disappears just as fast. Sustainable investing is about building a fortress around your future, a strategy that protects your money while allowing it to grow over time. Why is this so important? Because life happens. Markets go up and down. Economies expand and contract. If your investment strategy can't withstand a downturn, you're in trouble. Too many people get caught up in the highs of a bull market only to panic and sell when things take a turn for the worse. That's not investing. That's not investing. That's gambling. And let's be clear, the house always wins when you gamble. But when you take a sustainable approach to investing, you're playing a different game. You're focused on long-term growth, not short-term gains. You're diversifying your portfolio, managing risk, and making decisions based on logic and strategy, not fear or greed. Sustainable investing isn't just about protecting what you have. It's about positioning yourself for consistent growth. The beauty of this approach is that it works in any market condition.
When times are good, your investments grow steadily. When times are tough, your diversified, well-planned portfolio cushions the blow. Over time, this steady, disciplined approach beats the roller coaster highs and lows of reactive investing every single time.
It's the difference between building a house on solid rock versus shifting sand. One will stand firm no matter what storms come your way. The other will crumble at the first sign of trouble. But here's the real kicker. Sustainable investing gives you peace of mind. When you've got a solid plan in place, you don't have to lose sleep over every market headline or economic downturn. You know, your investments are set up to withstand the storms and keep growing over the long term. That peace of mind is priceless. It allows you to focus on what truly matters, whether that's spending time with your family, pursuing your passion, or planning for the future. Investing sustainably isn't just about growing your wealth. It's about creating a financial foundation that supports the life you want to live. So let's make this clear. If you want to build lasting wealth, you need a strategy that's designed to stand the test of time. No more chasing quick wins or betting the farm on risky ventures. It's time to commit to a sustainable approach, one that prioritizes long-term growth, manages risk, and gives you the confidence to navigate whatever life throws your way. This is how you build real wealth. This is how you secure your future. And this is how you win. Let's get to work and start building your sustainable investment strategy today. Before you even think about diving into the world of investing, let's get one thing straight. You need a solid financial foundation. Too many people rush into investing because they've heard it's the key to building wealth.
And while that's true, here's the reality. If your financial house isn't in order, you're setting yourself up for disaster. Investing without a solid foundation is like trying to build a skyscraper on quicksands. It's only a matter of time before it all comes crashing down.
You've got to take care of the basics first, and that means getting your financial life in order before you put a single dollar into the market. Step one, build an emergency fund. Life is unpredictable, and if you don't have 3 to 6 months of living expenses saved up, you're one unexpected expense away from financial ruin. Imagine investing your hard-earned money, watching it grow, and then suddenly needing to pull it out because your car broke down or you lost your job. Not only could you lose money due to market fluctuations, but you might also face penalties for early withdrawals.
An emergency fund is your safety net. It keeps you from having to dip into your investments when life throws you a curveball. And trust me, life will throw curveballs. Next, you've got to deal with your debt, specifically high interest debt like credit cards or personal loans. If you're carrying debt with an interest rate of 15 or more, you're losing money faster than you can make it in the market.
Think about it. Even if your investments are earning a solid 80 annually, you're still in the hole. If you're paying double that in interest on your debt, paying off high, interest debt is one of the smartest investments you can make.
It's a guaranteed return on your money and frees up your cash flow to invest more aggressively in the future. Now, let's talk about budgeting. I know it's not the most exciting topic, but it's absolutely essential. If you don't know where your money is going every month, how can you expect to invest wisely?
You need to create a budget that accounts for all your income and expenses, including your savings and investment goals. A budget isn't about limiting your freedom. It's about giving you control.
It allows you to prioritize your financial goals, cut out unnecessary spending, and make sure you're consistently putting money toward your future. When you have a clear budget, you're not investing with whatever's left over.
At the end of the month, you're investing intentionally and consistently. Finally, make sure you have the right insurance in place. I'm talking about health insurance, life insurance if you have dependents, and even disability insurance. The last thing you want is for a medical emergency or an accident to wipe out your financial progress. Insurance is there to protect you from catastrophic losses, allowing you to stay on track with your investment goals, even when the unexpected happens. Here's the bottom line. Before you start investing, you need to build a strong financial foundation. Without it, you're putting your future at risk.
But when you've got your emergency fund, you've paid off your high interest debt, you're sticking to a budget, and you're properly insured, you're ready to start investing with confidence.
This foundation doesn't just protect you, it sets you up for long-term success. So don't skip this step. Do the work, lay the groundwork, and then you'll be ready to start building real wealth through sustainable investing. Let's get to it.
Let's talk about one of the most important principles of sustainable investing, diversification. If you've ever heard the phrase, don't put all your eggs in one basket, this is exactly what we're talking about.
Diversification is your secret weapon against risk. It's the strategy that keeps your investments steady when the market gets rough. And trust me, the market will get rough. It's not a matter of if the market will experience downturns, it's a matter of when.
But here's the good news. With a well-diversified portfolio, you don't have to live in fear of market volatility. You can weather the ups and downs and still come out ahead in the long run.
So what does diversification look like? It means spreading your investments across a variety of asset classes, stocks, bonds, real estate, and even cash. Each of these asset classes behaves differently in the market.
When stocks are down, bonds might be up. When the real estate market cools, other assets in your portfolio can help balance the impact. Diversifying your portfolio reduces the risk of any single investment dragging you down. It's like having a safety net. If one part of your portfolio takes a hit, the others help cushion the blow. This balance is what keeps you on track toward your long-term financial goals, even when the market feels like it's on a roller coaster.
But it's not just about spreading your money across different types of investments.
Within each asset class, you need to diversify further. For example, in the stock market, don't just invest in one or two companies, even if they're big names like Apple or Amazon.
Instead, look at a mix of large cap, mid cap, and small cap stocks. Include companies from different sectors: technology, healthcare, energy, consumer goods. Because what affects one sector might not impact another. Better yet, consider investing in mutual funds or exchange traded funds, EFs, which allow you to own a broad range of stocks with a single investment. These funds give you instant diversification, and they're a great way to reduce risk while still participating in the market's growth. The same goes for bonds. Don't just stick with one type of bond. Mix it up with government bonds, corporate bonds, and even municipal bonds if they fit your strategy. Each type of bond has its own level of risk and return, and diversifying across them helps stabilize your portfolio. And let's not forget about real estate. Whether it's direct ownership of rental properties or investing in real estate investment trusts.
Right.
Adding real estate to your portfolio provides another layer of diversification. It's a tangible asset that can generate income and appreciate over time, providing balance to your overall strategy. Now I get it. Diversification might not sound as exciting as picking that one hot stock and hoping it takes off. But let me tell you something, building wealth isn't about excitement. It's about consistency and discipline It's about protecting your hard-earned money while allowing it to grow steadily over time. Diversified portfolio might not deliver the thrill of a sudden windfall, but it will give you something even better. Peace of mind. You'll sleep better at night knowing that your investments are protected no matter what the market throws your way.
And here's the beauty of diversification. It doesn't just protect you from losses. It positions you for growth. By spreading your investments across different asset classes and sectors, you're tapping into multiple streams of potential growth. Some investments will perform better than others at different times. But over the long term, this balanced approach will help you achieve consistent, sustainable growth. That's what sustainable investing is all about. Steady progress toward your financial goals without the heart-stopping drops that come from putting all your eggs in one basket. Here's the bottom line. Diversification is a non-negotiable part of any sustainable investment strategy. It's not just a smart move. It's an essential move. Don't gamble your future on the performance of a single investment. Spread your risk, balance your portfolio, and give yourself the best possible chance of building lasting wealth. Let's get to work and make diversification the cornerstone of your investment strategy. Here's a reality check. Investing is not a get-rich-quick scheme. If you're looking for a fast buck, you're in the wrong game.
Real wealth.
The kind that lasts through market swings, economic downturns, and unexpected life events. Build over time. Sustainable investing requires patience, discipline, and an unwavering focus on the long game. And let me tell you, the long game is worth it. The long game is worth it. The magic of sustainable investing lies in the power of compounding. When you give your money time to grow, the returns don't just add up, they multiply. But here's the catch. You have to stay the course, even when the market tests your patience and your nerves. The market will test you. There will be days, months, even years when your portfolio takes a hit. You'll see red on your account statement, and every fiber of your being will scream at you to sell, to cut your losses, to do something. But this is where the real investors separate themselves from the gamblers. The real investors know that short-term losses are just part of the journey. They understand that the market is like, in the hands of a man walking up a staircase. It goes up and down the short term, but over the long haul, it trends upward. Historical data backs this up. Over any 10, 20, or 30-year period, the market has consistently delivered positive returns. But you only benefit from that upward trend if you stay invested.
Let's talk about why time in the market beats timing the market. Too many people think they can outsmart the system. They try to buy low and sell high, jumping in and out of the market based on the latest headlines or market predictions.
But here's the truth. Even the most experienced professionals can't consistently time the market. It's a fool's game. If you're constantly trying to guess when to buy and sell, you're going to miss the market's best days. And those days make a huge difference. Studies have shown that missing just a handful of the market's top performing days can drastically reduce your overall returns. The best strategy, stay invested, ride out the storms, and let time work its magic. And here's where patience really pays off. The longer you stay invested, the more predictable your returns become. In the short term, the market can be a wild, unpredictable beast. But over the long term, it smooths out. The highs and lows balance each other. And what you're left with is steady, sustainable growth. That's why investing is a long-term game. It's not about what happens this year, even next year. It's about where you'll be in 10, 20, or 30 years.
And trust me, when you look back, you'll be glad you stuck with it.
But let's be clear. Focusing on the long game doesn't mean ignoring your investments. It's not a set and forget it approach. You still need to monitor your portfolio, make adjustments as your goals and life circumstances change, and rebalance your asset allocation periodically.
What it does mean is that you don't let short-term noise distract you from your long-term goals. You keep your eye on the prize. You remember why you're investing in the first place. You remember why you're investing in the first place, whether it's to retire comfortably, send your kids to college, or build a legacy for future generations.
Here's the bottom line. Wealth isn't built in a day, and sustainable investing is all about playing the long game. The market will test your patience, but if you stay the course, the rewards will come. Trust the process, stay disciplined, and let time do its work. Because in the end, patience isn't just a virtue. It's the cornerstone of your financial success. Let's commit to the long game and start building the wealth that will secure your future. Let's talk about something that doesn't always come up in investment conversations, but is absolutely crucial. Aligning your investments with your values. For too long, people have treated investing as a purely financial exercise. Just numbers on a page chasing the highest return. But here's the thing. Your money has power. Every dollar you invest is a vote for the kind of world you want to live in. And when you align your investments with your values, you're not just building wealth. You're making an impact. You're putting your money to work in a way that reflects who you are and what you stand for. That's the power of purposeful investing.
Now, this isn't just about feeling good. It's about making smart financial decisions that also have a positive impact.
The good news is you don't have to sacrifice returns to invest in line with your values. In fact, companies that prioritize sustainability, ethical practices, and social responsibility often outperform their peers over the long term.
Why?
Because they're built for the future. They're thinking about long-term growth, not just short-term profits. They're managing risks more effectively, whether it's environmental, social, or governance related. When you invest in these kinds of companies, you're investing in businesses that are positioned to thrive in a rapidly changing world.
But how do you get started? First, you need to define your values. What matters most to you? Is it protecting the environment, supporting fair labor practices, promoting diversity and inclusion?
Maybe it's all of the above. Once you're clear on your values, you can start to identify investment opportunities that align with them. Look for funds that focus on sustainable or socially responsible investing. Right. These funds screen companies based on their environmental, social, and governance (SG) practices. They allow you to invest broadly while staying true to your principles. And don't just stop at mutual funds or ETFs. ETFs. Many companies provide detailed SG reports that show exactly how they're performing in these areas. Do your research. If you're considering investing in individual stocks, take the time to learn about the company's values, practices, and long-term strategies. Are they committed to reducing their carbon footprint?
Do they treat their employees fairly? Are they transparent about their governance? When you invest in companies that align with your values, you're not just making a financial decision, you're supporting businesses that are working to create positive change.
But let's be real. No company is perfect, and you won't always find investments that check every single box. That's okay. Purposeful investing isn't about perfection. It's about progress.
It's about making intentional choices that move you closer to your goals, both financially and personally. Even small steps can make a big difference over time. And remember, your portfolio isn't set in stone.
As you learn more and as new opportunities arise, you can adjust your investments to better reflect your value. Here's the beauty of purposeful investing. It gives your money a mission. It transforms your portfolio from a collection of assets into a force for good.
And when your investments align with your values, you're more likely to stick with your strategy, even during market turbulence.
Why? Because you're not just chasing returns, you're investing in something bigger than yourself. You're building wealth while contributing to the kind of world you want to see. That's powerful, and it's deeply motivating.
Here's the bottom line. Your investments should reflect not just your financial goals, but your values and your vision for the future. By investing with purpose, you're not just growing your wealth. You're making a difference.
So take a closer look at where your money is going and make sure it's working in ways that matter to you. When you do, you'll find that the return on your investment is about more than just dollars and cents. It's about creating a legacy you can be proud of. Let's make it happen. Let me tell you something about investing. The moment you stop learning, you stop growing. The world of investing is constantly changing. Markets evolve, industries rise and fall, new opportunities emerge, and what worked yesterday might not work tomorrow.
If you want your investment strategy to stay sustainable, you have to commit to lifelong learning and flexibility. You can't just set your portfolio and forget about it. You need to stay engaged, stay informed, and stay adaptable.
Because here's the truth. The most successful investors aren't the ones who guess right. They're the ones who keep learning, stay curious, and adjust their strategies as needed.
Education is your greatest weapon. The more you know, the better equipped you are to make informed decisions about your money. But let's be clear. You don't need to be a financial guru to succeed. Start with the basics. Understand how the market works. Learn the difference between asset classes and get a handle on the principles of diversification and risk management. Then dig deeper, read books, follow reputable financial news sources, and listen to experts who align with your values goals. Take advantage of free resources like podcasts, webinars, or even courses offered by your employer or financial institution. Every bit of knowledge you gain adds another layer of confidence and control to your investment strategy. But here's the thing about learning. It's not just about taking in information. It's about applying it. As you learn more about investing, you'll start to see areas where you can improve or refine your strategy. Maybe you realize your portfolio is too heavily weighted in one sector, or maybe you discover a new investment opportunity that aligns better with your goals. The key is to stay open and flexible. Investing is not a static process. It's dynamic. Your goals, risk tolerance, and life circumstances will change over time, and your investment strategy needs to change with them. Flexibility isn't a sign of weakness. It's a sign of strength. It shows that you're engaged and proactive, not just coasting along.
And let's talk about rebalancing. This is one of the most practical ways to keep your portfolio aligned with your goals. Over time, as the market shifts, some of your investments will grow faster than others.
That's a good thing, but it can also throw your portfolio out of balance. For example, if your stocks outperform your bonds, your portfolio might become riskier than you intended.
Rebalancing, selling some of what's grown and reinvesting in what's lagged, helps you maintain the right mix of assets for your goals and risk tolerance. It's not about timing the market. It's about staying disciplined and sticking to your plan. But growth isn't just about the numbers in your portfolio. It's about your mindset. Investing can be emotional. Fear and greed are powerful forces, and if you're not careful, they can derail your strategy. That's why it's so important to stay grounded in your goals and principles. When the market takes a dip, don't panic. Remember that you're in it for the long haul. When it soars, don't get greedy.
Stick to your plan and resist the urge to take unnecessary risks.
A calm, steady mindset is one of the most valuable assets you can bring to your investment journey.
Finally, don't be afraid to seek help.
Even the most experienced investors rely on advisors, mentors, or financial professionals to guide them. A good advisor doesn't just help you manage your money. They help you stay on track, avoid common pitfalls, and make decisions that align with your values and goals. Whether you work with a professional or lean on a trusted community of like-minded investors, don't try to go it alone. Investing is a journey, and having the right support can make all the difference. Here's the bottom line. Investing is a lifelong process of learning, growing, and adapting. The market will change, and so will you. But if you stay educated, stay flexible, and stay committed to your goals, you'll build a strategy that not only grows your wealth, but also evolves with you. Investing isn't just about the money. It's about creating a life of stability, opportunity, and freedom. Let's commit to that journey and make your investments work for you, now and for years to come. You've got this